Yo, what's up, YouTube fam? It's your boy Stevenson Lindor back again with another video. If you're new, please make sure you like, share, also comment on this video. Make sure you join the Telegram in the description box below. Share it with your friends, share it with any up-and-coming trader trying to get hip to what's going on when it comes to trading in the financial markets. Share with your group, your team, whoever, right? It's free, right? I drop some, analysis throughout the week on what I see what's going to happen in the market, on top of sometimes doing just free webinars. I did one earlier this week. But what's up, YouTube fam? As always, disclaimer below. All right, past profits do not guarantee future profits, any money, anything like that. All right, this is just always my perspective. So today was FOMC, and today was a good day. Today was a good day. Right. So 2 o'clock, we had FOMC. I'm not gonna lie. If you guys been following me for a while, truth be told, I don't really pay attention to news like that. I always get asked, "Yo, Steve, what do you think about the news? What do you think about fundamentals?" Yeah, do I factor it in? Of course. I'm not oblivious to what's going on in the world, of course, right? But I truly believe like the market, especially when you understand it from a technical standpoint, what's gonna happen is gonna happen. Like the market already knows it's gonna make that move. Okay. So the more you understand the charts and what's going on, the less you pay attention to noise. Because truth be told, by the time the news comes out, you're already late to the party. All right, think about it. Let's not even factor in, trading, right? When something's reported on the news, you gotta understand they're reporting something that has already taken place. So people are already aware of it, right? People are already aware of it. You think in a 6.6 trillion daily market that the powers to be, people who are in control, they don't know what's about to happen before the news event comes out? They know. Trust me, they know, right? Your favorite NBA star, NFL star, any star, right? They like the people behind the scenes, they know they're about to get traded long before the announcement is made. All right. So, with that being said, I am aware of the news, and I only pay attention to like big news events like FOMC, NFP, stuff of that nature, just to know that if the market acts erratic for the day, it's because of that news event. But we were already expecting that, especially in my group. You've been trading with me for a while. You've been watching me for a while. You know that. All right. So let's check it out. What moves were we watching this week? If you were a part of the free Telegram, go to the free Telegram real quick. Again, make sure you share this with your friends, your pals. Make sure you're a part of it. Um, since the beginning of the week, right? What is this? This was today. Today is November 2nd. So even since yesterday, as you can see, US 30. Actually, I've been talking about this since the beginning of the week. We've been looking for a sell. Supply zone, boom, sell on S&P 500. And I was looking for a sell on gold, amongst other pairs. But I want you guys to look at this chart markup. All right, let's go. S&P 500. See, look at the date. This was yesterday. This was last night. We knew. Wasn't shocked. This didn't catch us off guard. It's the news. If anything, the news helps. We appreciate it. Thank you. Thank you very much. All right. What was that? S&P 500. Voila. Same chart. All right. This was yesterday. So marked up yesterday, as you can see. Boom, boom. Market right now. We called it the fake out zone. Somebody asked me, how do you prepare for fake outs? Really don't, right? We don't get caught up in fake outs. All right, we do not get caught up in fake outs. Let's go to live account. We catch the moves. I was a little late on US 30, but caught it nonetheless. Got this dropping pretty nice. So, we on it. We're not oblivious to it. So people always ask, yo, how do you catch moves like this? And again, how do you not get caught up in fake outs? Well, a lot of times when it comes to especially news events, news is there to spike out, especially a lot of retail traders, right? Get retail traders out the way, get them thinking that the market is going the opposite direction, and then hit them with the real move later on. All right. I always say this: if it's a real move, all right. So for example, let's erase all of this for a second. All right. First off, S&P 500 is in a clear downtrend. It's in a clear downtrend. All right, it's in a clear downtrend. If you watch my other video, we're also at like what, a daily retest. So there's a high probability. What does that mean? And this is why I always tell you guys, always look at the higher time frame first. Always look at the higher time frame first. Let's say this one last time. Always look at the higher time frame first. All right. The reason why you want to look at the higher time frame so you know what's going on as a whole. So you don't get caught with fake outs or anything else that's happening. Right. You can clearly see based on this daily time frame on S&P, this is about to really drop. Right. We can tell another drop is coming. Right. You even got, remember, this is a daily retest over here. That means there's about to be a daily wave down. So there's more coming. All right. So, anyways, we're in an overall downtrend. So at the end of the day, even though this was on an uptrend here, right? This was going up. And we actually caught some of these buys going up. We knew long term, overall, this is going down. And how is that? Right? Well, we identified, all right. I'm about to give you not a nugget, not nothing that I haven't already told you guys, but like more of like an aha moment, especially for those of you guys who are struggling, especially finding like zones and just wondering where to look for those entries. Once you identify the overall trend, guys, keep this in mind always. All right. So we're in a downtrend, right? So when you're in a downtrend, what you want to do is identify all that bearish movement going down, right? So if this is the downtrend right here, correct? This is the downtrend right here. Notice what qualifies the downtrend? The bearish candles, the bearish candles, the bearish candles, the bearish candles. So what I want to look for is the bullish candles that are in between the bearish candles, right before the bearish move. See right here? So I'm not going to highlight these bullish candles right here because there was no bearish move afterward. See how this bullish candle and then you had this bearish move down? See that? See this right over here? Boom. I'll say all of this right there. See? So these are what you call your supply zones. All your zones where price will potentially hit before making its move. All right. So perfect example, you see this? This is a what? An uptrend. And somebody asked me from the previous video about entries. So this is a perfect example right here, right? This is an up move, right? On the MACD, you can tell bullish, move up. So what? We got it's classified by all these bullish candles, right? We got our breaker structure. We are now going up because we were in a downtrend previously. We're now going up. Now, if you notice all the bearish candles in between the bullish candles going up, those are your zones. See right here, right? You got one right here. You got one right here. You got one right here, right? And notice how when price is coming down, notice how it respects these zones. Boom, right there. Didn't go far, right? But this is off the daily, and this is S&P, so you guys already know this is based off of points. You're grabbing pretty solid moves here. Didn't really go far, but boom. Right? My point is, look at how price respects these zones. So that's the first zone. Then on the daily, it comes down to the next zone. This right here. Look at that. Boom. Going up. Let me get that out the way. Then the next zone. Right here. Look at that. Nothing too crazy. Remember, this is really based off the daily candle. So if I was to go to a smaller time frame, I got a decent bounce right here. And because this is S&P, as you guys know, this is more than enough to make some decent money. You know, when it comes to indices, you don't need huge moves to make money, right? But just to prove my point, right? Notice every time price comes around, right? All the areas, because technically this is a what? Again, an uptrend. Notice price that moves by all the candles, all the bearish candles that are in between the bullish candles that are going up. You get reaction. So if you focus on those zones, so like right here, see here, right? See, this is technically the last bullish candle before this bearish move down for that continuation, because we are in a downtrend right there, right? So now, and I did this on the last webinar, if I was to identify this leg with fibs, because we're in a downtrend, I'm start from the high to the low. Price hit what? That 50 fib. That 50 fib right next to it is a POI, right? POI sell zone, all right? Also 50 fib, 50 fib line, right? I'm at a daily retest. I'm in an overall downtrend, right? Look at all these confirmations. All this giving me confirmation like, yo, we're getting a nice sell setup that's about to take place. So now once I have this all lining up, now it's just a matter of, all right, how do I enter the trade? Well, there's a couple ways I can enter the trade. All right, I can go based off of price action. All right, so 3 ways you can enter a trade. Right, number 1, price action. Number 2, right, break and retest. Number 3, right, confluence. So basically, combination of indicators, price action, so on and so forth. Right, makes sense? So with these 3 different ways, all right, and obviously they put in more, but I think these are the 3 best right here. You know, just pure price action, break and retest, confluence, combination of like indicators and, you know what I'm saying? Price action, everything else. These are the methods I want to use to enter the market, right? So now remember, always remember this, guys, wherever, whether it's the daily, the 4-hour, the 1-hour, doesn't matter. When you're looking for your entry, you never do it on the time frame you marked up your chart. All right. Yeah, I can enter off the daily, but I'm missing daily moves here. I'm missing daily moves here. If I waited to the daily, I would miss this entire move here. That's where the smaller time frame comes into place. So I want to always drop down like at least a couple time frames. I always say this around like 2-3 time frames. So if I'm on the daily, I want to go check out at least the 1-hour. So if I want to go off of, let's say, price action, all right? So I wait till price gets into the zone, guys. Where's my zone? My zone is here. It's in between these 2 lines right here. There's my zone. So I only want to enter inside of here, not before it, not at inside of here. All right? So price action, which is something I like to, which is one of my favorite things to enter trades, purely price action. All right. So when I see the market coming up, now, mind you, when the market is entering into the zone, it is in a what? It's in an uptrend. Right? So you got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, so on and so forth. So like I always say, you need to make sure what breaks. You get that last higher low break, then you get that retest, then you look for the entry. So we actually had it here, right? Higher low, higher high, higher low, price broke. This was your retest. Only problem is price did what? It created a new high. So if you would have entered, let's say right here, right? Well, there was no reason to enter because guess what? Price just blew past it. There was no bearish candlesticks. So when this broke and then retested here, there was no bearish candlesticks giving you confirmation for a reversal. So no reason to enter there, right? Price created a new high. Then I got a new level of breaking structure. Boom, got a break here, right? I got a break here. Price broke, and this was a news candle, as we all know. This was a spike up, right? This was a spike up. So again, one or two things I'm always looking for, all right? I'm looking for multiple either bearish or bullish candlesticks going in that direction before I buy or sell, right? So you see here, let's start back here when we had that initial break and retest. So when I go based off of just price action, I want to see, make sure. So since I'm selling, I'm looking for bearish candles to form. And because I'm on the 1 hour, I need to wait a whole 1 hour candle, whole 1 hour time frame. So right now, looking at the time, it's 8 o'clock. So I would have to wait until it's 9 o'clock for this to finish. But like I said, I like to see multiple candles going in that direction. So me, I wait for at least two, sometimes three. But because this is that 1 hour time frame, I like to wait for two. Two 1 hour candles here, boom. One can say, hey, I get in on this third. So if it's 8 o'clock, that means 8, 9. I wouldn't get in until 10. Entry here, stop loss above, and then I look to see if my move takes off. It takes off a little bit, but again, what happened? Price retraced, right? Price retraced. It pulled back. Let's say I didn't move up my stop loss. Let's say I just got taken out, all right? As you guys know, I'm like a worst case scenario. What happens if worst case? Now, worst case, price pulls back, takes me out the trade. Let's say I didn't move up my stop loss. I didn't, and then, I lost the trade, right? Now, this is what most people do. When they lose a trade, and honestly, guys, I'm going to be frank, where most of you guys mess up. I know y'all love coming on this channel and commenting this and that and that and that, and I want to learn something new. I want to learn something new. Like I always tell people, where most of you guys really struggle at is the mental part, is the lack of discipline, right? The lack of discipline, the lack of patience, and terrible risk management. Honestly, that's where most traders really, really struggle. It's not the strategy. The strategy is actually, to me, what I found, especially with training a lot of people pick up on the strategy quite easily, very easily. The struggle is the mental part. And I discussed this on a couple of my sessions this week on the free Telegram webinar, on my Go Live session, during my morning session with the team, my private team. People will do well on their trading account, right? They'll do perfectly fine when they use proper risk, show discipline, and are patient. And I think everybody who's watching this right now, they've all done the same thing. You know it. You follow the rules, and you're good. You're good for a week, 2 weeks, 3 weeks. You're like, wow, my account is growing perfectly, no problems. But then, for some reason, you break the rules, right? You're no longer patient. You're erratic. You're no longer disciplined. You're not following the rules. And most importantly, you start trading recklessly. You, for whatever reason, let me just put this standard, 2 standard, 3 standard, 5 standard, because I know I can make $1 million today. And then you fuck everything up. Then your account starts really going backwards. And then you blame the strategy, you blame TradingView, you blame the broker, you blame everybody. You blame God, you blame everybody except yourself. All right? I'll be honest with you guys. Everybody, and you from your favorite trader to Jesus Christ himself. We've all taken losses. Every single one of us. It's a part of the game. It's a part of the game. Now, what you got to figure out, if price was to take me out here and it's still within my zone, which it is, it crawled back in my zone. That means it's still in play. It's still in play. You know why I know it's still in play? Because guess what? Overall, I am still in this overall downtrend. Price, for this to be an uptrend, price would have to break this all the way up. So until price breaks this high up here, we are not in an uptrend. So just because I'm on the 1 hour and there was just one big 1 hour candle that just happened to spike up, that does not mean we are in an uptrend. I always tell you guys, the same way, you see this right here? Let me erase all of this. See what price did over here? What did it do? It broke structure and then did what? It made a correction. It broke structure, correction, right? Break structure, right? Correction. So no matter what, until you get that correction, even if price spikes up or down, whatever, if you don't get that correction, you see how this spiked down? You know how this was going to go for the sell? Because it corrected. It moved sideways. If I don't get that break and retest, I do not jump in the trade. That's why I wasn't scared today when prices were spiking everywhere. Somebody messaged me, I guess you were wrong, Steven. You said the dollar was going to go up. It went down. This spike right here, I said no. Why? We are still in an overall uptrend on the daily, right? I'm always looking at the bigger picture, right? When I was looking at the 1 hour earlier this morning, this is what we had, a correction here. Let me use the replay button. Before FOMC today, this is what we had. So I said, I'm looking for a buy. Overall, we're in an uptrend. Boom. And again, I just discussed this with you guys, right? What is this? This is an uptrend. So during this uptrend, we got some POI levels. We got one right here. We got one right here. We got one down here. For this to truly be a downtrend, I would have had to see price spike down, break through these levels, and then what? Correct. The same way this broke down and it correct. This broke down and it correct. This broke down, right? The same way this broke down and correct. You see the pattern? That's why I don't freak out during news events when candles I don't need this no more. When candles spike down like that, all it did was spike to the low here and then boom. Imagine if you didn't wait for this 1 hour candle and you started selling. I felt bad for all the sellers right here. And you had sellers right here. That's why the market left it like this, right? Wicks, big wicks like that are created because somebody bought into that. So you had sellers, people thinking this was a sell because they weren't patient and they didn't wait it. They got caught up. So once I would have saw this retracing like this, I would have been like, oh, okay, it just came to a POI zone. It's not even breaking. And as you can see, once it closed, sell on EU, sell on GU, sell on AU. You know what I mean? Anything with a dollar in it, you know, you're either selling or you're buying against it. And that's exactly what happened, right? So back to S&P 500. All right. So again, if price is coming up, all right, let's say it took me out. Let's say even though I'm going based off of price action, right? It came up to this high. Before the market got here, I'm thinking, all right, it's still in my zone. I got multiple bearish candlesticks going in that direction. And again, you probably made some decent money. You know, let's see, points from here. If I would have gotten somewhere here, yeah, you would have made a decent amount of money. But let's say price would have traced, taken you out, came back, still in the zone, right? Because again, we didn't get a new high, right? We got a correction here. right? So we knew this buy was coming, but it didn't break this previous high. Remember, guys, when you're in a trend, a trending market, new highs and new lows are supposed to be created. Once that stops, you got to think to yourself, all right, the market is reversing. Again, this is where from this downtrend, we got a high, new high, new high, new high, new high. When this came up, it did not create a new high, right? So that's when you got the break, and that spike up was the retest. That was caused by the news, and then boom. So once it came down here and I would have saw these two bearish candlesticks, I would have pretty much got in, right? And again, you did have that fake out that was caused by news. If there wasn't no news, I think this would have just dropped down calmly, and then boom. So that's price action. The next way is a break and retest, right? Which we just went over. So again, me personally, my favorite time frames to look for entry, 15-minute, 5-minute. Yes, I do use the 1 minute sometimes. I will say this, if you're going to use the 1 minute, guys, make sure you understand what you're doing. Because what I noticed with a lot of people who try using the 1 minute time frame, remember, these candles are moving every 1 minute. So it's very fast, right? And something that's moving that fast, a lot of times it likes to cloud people's judgment. People can't move up with it. As much as people like the 1 minute and they want to, get these 1 minute wicks and all that stuff like that, I rather, move with clarity instead of trying to keep up with speed and I don't know what's going on and it's moving too fast for me. So I always tell people when it comes to entries, 15-minute, 5-minute, right? So let's say I'm going down to the 15-minute or better yet, even the 5-minute, right? Again, classic break and retest. So market came up, boom, I got my break. And then you actually had multiple retests right here. If you look at your MACD, every time it kept pulling back, boom, boom, and then that big spike. Those were your retest area. Entry there, stop loss right above, and then there's your move down. All right. This won't happen often unless news event. All right. Which is what we saw today. And then last but not least, indicators. All right. And we talked about it on the Confluence video, a couple of videos back, or was it the last video? I don't remember. All right. If you want, use 2 moving averages, a Bollinger Band, whatever makes you feel comfortable. All right. Again, price is in that zone. So keep in mind, when you're looking to buy, you're looking for your smaller EMA. So like my 9 EMA, that's the red EMA right there. My bigger EMA, the 200, that's the blue one. So when the smaller is above the blue one, that's when you're looking for a buy. That is called a golden cross. For those who don't know, that is when you buy. And when the smaller one, the 9 EMA, crosses below the 200 EMA, the bigger one, that is called a death cross in trading. This is your signal to sell. So pretty simple. Now, you definitely, if you're going to use indicators, make sure you go to a smaller time frame, preferably 15, 5-minute, 1 minute if you can, because remember, indicators lag. Don't forget that. So if I was using, remember, this was a daily setup. So if I was using based off the 1 hour, I would have missed my move. It's just now crossing. So I would have missed all of this, right? As you can see, the smaller the time frame, right, the closer it gets, right? So now based on this 15-minute, this would have been my first area of entry. On the 5-minute, my entry would have been right around here. And then on the 1 minute, as you can see. So you guys understand that? That's why I say you mark up your chart on the higher time frame. You look for your entry on the smaller time, your entry and your stop loss on the smaller time frame. So if I'm entering right here based on the 1 minute, my stop loss is above here. If I'm entering on the 5-minute, same thing. My stop loss right above there. All right. So knowing where you're entering is also important. So those are 3 methods. I'm using either a classic break and retest. I can use Confluence, multiple indicators, right? And I can do break and retest with that as well. As you can see, break, right? Above, retest, and then let it cross over again. And then there's my sell. So price action, break and retest, moving averages, and you can combine all of them if you want, right? Whatever makes you feel comfortable. But those are the methods I use to enter the market. But I just wanted to, jump on here and explain, guys, how we're able to just basically catch these moves on a week to week, basis. Trading doesn't have to be difficult. Gold, as you can see, some of my favorites for the week. I'll mark up all these charts. And as you can see, we had a sell set up here for gold. There you have it, right? Again, we're not afraid of these spikes. In our group, like I teach that. I make sure that's part of the lesson. Like, don't be scared. So many people react. Oh, there's a news event. There's a news. I was even on TikTok scrolling earlier today, and this guy was talking about how traveling to other countries is fun and exciting, and how much our dollar is so much stronger. I think he was in Colombia or talking about Thailand, and then somebody was in the comments just talking about, yeah, wait till FOMC, and I was just like, that dude. That people think like that one news event is going to make such a drastic change in the market that it's just going to shift. Like, that's not how it works. Absolutely not. Right. So don't be afraid of when the market do these spikes. And even if they do, right, even if this would have held, I still wouldn't buy. You know why? Because it would have had to break this entire structure. The body of the candle would have had to close, and then I would have had to see a correction. If that whole sequence did not take place, I do not believe that was a buy. I'm going to stay with the overall trend, which is a downtrend. See that? See? Look at the day. This was provided yesterday. Played out perfectly. And this was also dropped in the Telegram, free Telegram. Make sure you join it. Pass this to your group, your friends, whoever. Where is gold? Pretty sure I dropped gold in here. It was the US 30, German 30, S&P. I did it the other day. No, I thought I did. All right. I know I dropped it earlier today, but the move had already happened. I thought I did. But point is, that's how we're able to catch these moves. All right. So I just want to do this update video, show you guys we absolutely killed it today for FOMC. Trading on news events like that doesn't have to be scary at all. It used to be for me back in the day, but now just a regular trading day. Structure is structure at the end of the day. As long as you understand structure, as long as you know what to look for and what to pay attention to, you'll be absolutely fine. For the rest of the week, the market is just going to continue. I don't see any big reversal, just small corrections like this, and then continuation to the downside, right? I got gold going all the way to like 1620. So I probably wouldn't even, for this example, I wouldn't even sell here. Because look where we're at. Got this little support. Probably go down to the 15-minute. Yeah, probably let it pull back a little bit and then set up for another sell. All right, set up for another sell. Let's get this right. I want to jinx you guys. So, yep. If price doesn't drop immediately right over here, let it come to the 15 fib. So either right here or 50 fib, and then continue dropping down. I don't think it's going to push from 1635 all the way back to 1650, 1648, but it could. I mean, this is where a POI zone, this would be the ideal spot, but definitely continuing down. I got this touching pretty much 1620 below that to end the week off. All right. And then all the indices to do the exact same thing. Oh, if there's a trade for you guys to really focus on, I would focus on Euro New Zealand, which is about ready. Yeah, I like this a lot. I will drop this in the chat right now for you guys. Focus on this. This is a big play. Euro New Zealand buy set up. Watch carefully. There you go. All right, ladies and gentlemen, I hope you enjoyed this quick video breakdown of FOMC not getting caught up by fake outs and news events. Practice. All right, work on your mindset because I know when news events come out, people really get shaken up and they freeze and don't feel like they don't know what to do. Nah, don't do that. All right, treat it like any other day. You'll be perfectly fine. I really like this EN. I got to get in it myself. Big buy back up. Um, Definitely big buy. If we look at the daily here, this was just a pullback. I don't see it going all the way down to 164. That's another 500 pips. I think it's going to hold, and then I'm going to see another move up. But anyways, all right, make sure you like, share, comment below. If you guys want me to do any other videos, let me know in the comments what to do. I'm not going to lie, I'm running out of ideas. I'm probably just going to be just doing update videos, telling you what setups I see for the week, and probably do weekly outlooks on here going forward. I've taught on a lot of different subjects from indicators, how to use the MACD, stuff like that. But if you have something that you want to learn, just tell me down below. And, if it's a good topic, I'll do a video on it. But definitely join the Telegram group. If you want to join my private Discord and you want to be a part of the family, shoot me an email. My email's in the description box as well. All right, guys, as always, take care, stay blessed. Have a safe and profitable rest of the week. As always, make sure you're a student first. All right. Take care. God bless.